Okay, class, we're going to begin here on our week 9 video class lecture. In addition to what we're going through in class this week, you have a chapter summary that's due in the last part of the assignments that you have, as well as I'll have in the Dropbox a final exam study packet, study review for you, so you can have that as well. All right, so now we will proceed and jump right into chapters 11 and 12 in your book. So please follow along from chapters 11 and 12. What we'll be talking about are payment services for e-commerce, as well as the managing e-commerce implementations. So we'll go through what the most common online payment systems are and how they function, how payment cards are used in online retail transactions, what store value cards are and how they are used in electronic commerce, and what challenges and opportunities are presented for the use of digital cash. So as far as first thing we'll talk through is financial technology as an introduction. FinTech is the use of powerful internet connected computers that use tools to improve quality and reduce cost of services. This is existing in entirely new financial products and includes online payment systems not operated by banks and facilitates purchases and other money transfers. A couple of keys are that it's convenient and it's becoming widely adopted. It has revolutionized lending and is an online loan service that takes banks out of the value chain at a reduced cost. So common online payment methods include cash, checks, credit cards, debit cards are the most common world methods used to pay for purchases. More than 90% of all U.S. consumer payments are made through these methods. Electronic transfer is a small percentage. Most automated payments are coming from checking accounts. Credit and debit cards used for more than 60% of online payments, with alternative systems such as PayPal used for the remainder. And this is convenient for customers and cost effective for businesses and provides a significant environmental impact. So this pie graph shows forms of payment for U.S. online transactions. It's a couple of years old, 3 years old, but it's still pretty accurate as far as what you can see. So at 39%, credit cards are the largest form of payment, followed by debit cards, followed by alternative methods, PayPal primarily, but now I know you have Cash App, Venmo, and some of the other ones. Prepaid cards are 10%, and store brand credit cards make up the smallest percentage, 6%. So I think this, based on this visual, you can see how applicable these electronic forms of payment are, and just more of a breakdown on what each looks like. Okay, electronic bill and payment systems designed to deliver bills and accept payments. Success depends on the ease of use and time required. Consumers choosing these options, they are increasing. 70% of bills paid by check are now paid electronically, which a huge savings in paper, postage, and time. Biller direct systems are used by large companies who want to manage the systems themselves. Consolidated systems aggregate all of a customer's bills on one system only via banks. Not as attractive to billers because it requires a fee and delays the receipt of funds. So mostly they want to use the electronic method more so than the biller direct systems. So micropayments and small payments. Micropayments are internet payments for items costing a few cents to $1. A barrier to micropayments are that people prefer to buy small value items in fixed price chunks rather than small payments in varying amounts. Also, companies have developed micropayment systems, but none gained broad acceptance, so they're not as widely accepted as other forms. Small payments are payments of less than $10. These are offered through mobile telephone carrier, but held back by substantial charges for providing the service. And one of the largest markets in this is music downloads. So next we have payment cards. Payment cards are plastic cards used for purchases. Categories for these can start with credit cards, debit cards, charge cards, prepaid cards, and gift cards. Credit cards such as MasterCard, Visa have spending limit based on the user's credit history. Credit cards can be paid off, as far as the balance or minimum amount with interest charged on unpaid balances. These are widely accepted and provide consumer protection with 30-day dispute period. The card does not present transactions, but includes an extra degree of risk for merchant and the bank. Additionally, debit cards are electronic transfer point of sale cards. It removes funds from a bank holder's bank account and transfer it to the seller's account. These are issued by a bank with a major credit card issuer's name. American Express, for example, is a charge card, has no spending limit with the entire amount due at the end of the billing period. Retailers may offer their own store charge cards. Prepaid cards are called gift cards. And single-use cards have a disposable numbers valid for one transaction but not adopted by consumers. So advantages and disadvantages of cards. One advantage is for merchants. It includes fraud protections. They can authenticate and authorize purchases using the payment card processing network. Another advantage is interchange networks, a set of connections between banks and associations owning credit cards. An advantage for U.S. customers is limited fraud liability of $50, which is often waived if the card is stolen. Merchants view the per transaction and monthly processing fees as a cost of doing business. And consumers pay slightly higher costs for goods due to these cards and some charge of an annual fee. Payment acceptance and processing. U.S. online and mail order stores must ship merchandise within 30 days of charging payment. Significant violation of penalties, so most stores do charge accounts when the order is shipped. Processing payment card transactions online is a two-step process. The payment acceptance is establishing card validity and verifying the card's limit not exceeded by the transaction. And then clearing the transaction includes all steps to move funds from a cardholder's bank account into the merchant's bank account. So this moves us to open and closed loop systems. With a closed loop system, the card issuer pays a merchant directly without a bank or clearinghouse, such as American Express, Discover Card. These issue cards directly to customers. The open loop system adds an additional payment processing intermediaries to the closed loop system. So MasterCard, Visa, issued by a local bank. Visa and MasterCard are credit card associations operated by customer issuing banks who evaluate credit standing, establish credit limits, and absorb non-payment losses. So this is another graphic between the card holder and the card issuing bank. It kind of goes through the steps as far as the card issuing bank issues the card, sends the bill, the card holder makes the purchases, the merchant sells items to the card holder, the card issuing bank deducts fees and pays the merchant, and then the merchant sends information about the sale to the card issuing bank. The card holder then pays the bill to the card issuing bank, and it kind of gives a graphic of a flow of how these transactions work between the card issuing bank to the card holder to the merchant. As we often do, I want to take it a step further and go through a video or share a video for what this actually looks like for
Chapter 16.
For this particular lesson. We will circle back, but again, please make sure that you pay attention to what is, a little bit of what's being shared here, but also how it ties back into what we talked about already, and then hopefully this provides some reinforcement.
Payment methods, and we will also learn the basics of card-based payment systems and electronic account transfer, electronic cash payment systems, mobile payment, internet payment, and all that, and the between these different types of payment systems. Okay, we'll see one by one. So, first one, money becomes the major medium of exchange now in the world. So, usually money is transferred in the form of cash, and it differs from country to country. Here we use rupees, isn't it? So, whereas in US and all that you use dollars, it differs, and the value of money also differs. So, from cash to cryptocurrencies, they call it as bitcoins. We will learn cryptocurrencies later. Now, recently in the news, you would have heard about bitcoins, isn't it? So, we'll be also learning about bitcoins in cryptocurrency. So, physical money, that is cash, is the traditional and most widely used payment method. But there are many security and transportation problems. So, when you take a large amount of cash in hand, you automatically feel insecure. யாராச்சும் வந்து பிடுங்கிட்டு போயிடுவாங்களோ. ஸோ when you drop it from the bank and when you go home you feel an insecurity, isn't it? ஸோ இது வந்து நம்ம ஆன்லைனில் மணி ட்ரான்ஸ்ஃபர் பண்ணோன்னா we feel it secure nowadays, isn't it? So to support all that, banks have also now changed to electronic payment systems. So at the beginning, cashக்கு பதிலா they were trying to give check, draft and all that. Okay, DD, demand draft, கேள்விப்பட்டிருப்பீங்கல்ல. So a few years back, when if you don't want to pay by cash, you can pay it by check, or you can even use a demand draft, DD, for university exams and all that. Still they accept DD, demand drafts, to pay money. Okay, so this is the definition for electronic payment system. So electronic payment system is a financial arrangement that consists of an intermediator. Who is this intermediator? Maybe you would have heard of Google Pay, Paytm and all that, isn't it? Those are intermediators to facilitate transfer of money between the payer and the receiver. பேயர் யார்? நம்ம தான், ஒரு பொருள் நம்ம தான் வாங்க போகிறோம், பையர்ஸ், அவங்க தான் யார்? பேயர். ரிசீவருங்கிறது செல்லர்ஸ். ஸோ ஷாப் ஓனர்ஸுங்கிறவங்க ரிசீவர், நம்ம கஸ்டமர், நம்ம தான் யார்? பேயர். நம்ம ரெண்டு பேருக்கு நடுவில் சப்போஸிங் இஃப் we are going to pay through Google Pay or Paytm or credit cards or debit cards, so or your bank provides you with debit cards and credit cards and all that. Okay, so that is the intermediator. So when you clear buying a product through money, it is called as clearing service or liquidation. So as commerce student, accountancy students, you know more about liquidation. Okay, so the term electronic payment refers to a payment made from one bank account to another bank account using electronic methods. Okay, forgoing the intervention of bank employees. பேங்க்ல போய் நின்று தான் இந்த அக்கௌண்ட் நம்பருக்கு கொண்டு போய் இந்த மணி ட்ரான்ஸ்ஃபர் பண்ணுங்கன்னு சொல்ல வேண்டிய அவசியம் இல்லை. எவ்ரிதிங் we do it at home in front of the gadgets, isn't it? மொபைல் வழியாக பண்ணிக்கிறோம், அப்படி இல்லாட்டி லேப்டாப்ஸ் யூஸ் பண்ணி ட்ரான்ஸ்ஃபர் பண்ணிக்கிறோம். ஓகே, e-banking, mobile banking is so common nowadays. Okay, so this is the definition for electronic payment system. You will have to learn it for 2 more questions. And it is estimated that there are 700 different payment systems around the world, and I have given you few pictures of it. Okay, so here you have Paytm, Google Pay in the left hand. At the top is the bitcoins. Okay, so this plays a very important role in the economy nowadays, in the modern monetary systems. So even though we still have physical cash, we still have shops that accept physical cash, isn't it? Cash வழியாவும் இப்போதைக்கு பே பண்ணலாம் இல்லையா? So modern payment systems may be physical or electronic. சில ஷாப்ஸில் you have both. Either you can pay it in cash or you can pay it electronically, isn't it? So sometimes they adapt to both, and they have different set of rules, protocols to guide the financial institutions with payment mechanisms and legal systems.